Okay, let's unpack this. Imagine a $1.7 trillion fund, built on stability, tradition, managing a whole nation's wealth for the future. Now imagine that fund suddenly making an aggressive, calculated pivot into something like Bitcoin, historically volatile, right? Sounds almost like, well, science fiction maybe, or at least a really radical departure from how things are usually done. But that's exactly what Norway's sovereign wealth fund has just done. So today, our mission is a deep dive into this, frankly, unprecedented move. We're going to peel back the layers on their strategy, the sheer scale of it, and maybe most importantly, what does this signal? For the long-term future of digital assets in the whole global financial system. The insights we're drawing on here, they come mostly from a recent, really meticulous report by Yukita Khatri, and that synthesizes critical analysis from Standard Chartered, specifically the work of Geoffrey Kendrick. He's a pretty prominent voice, often quite prescient actually, in digital assets research. Our goal for you listening in isn't just to give you the headlines. No, we want to cut through any, perceived complexity here. We want to make sure you walk away with a really solid, well-informed understanding, the what's, and crucially, the why behind this huge institutional shift. We're here to pull out the most important nuggets of knowledge so you're not just informed, but, genuinely well-informed on a topic that's, well, it's rapidly reshaping global finance. Let's dig in.
It is absolutely fascinating. And what really stands out, I think, isn't just the size of the fund itself, which is massive, obviously. It's the deliberate nature of their actions. When an entity that conservative, that influential, like Norway's fund, makes a move like this, it's not just another transaction, it's a statement, a really profound one. It kind of forces us all to reevaluate what safe and long-term even mean anymore in today's digital and, frankly, uncertain economic world. It signals a growing, well, maybe measured, but definitely growing institutional comfort, or perhaps even a strategic need to get exposure to digital assets in ways we might not have thought possible for giants like this just a few years ago.
Yeah, you've hit on something critical there. To really get the gravity of this, we need to properly introduce the main player here, Norges Bank Investment Management. That's the formal name. Most people just know it as Norway's government pension fund global. Now, this isn't just a big fund. It is unequivocally the world's largest sovereign wealth fund. Just to put that in perspective. It manages a colossal $1.7 trillion in assets. Let that number sink in. Trillion. It's just a staggering amount of money representing, the collective wealth of Norway, mostly from oil and gas revenues, all meticulously invested, safeguarded for future generations. Their mandate is long-term, stability-focused, and historically incredibly risk-averse. So when an entity this big with that kind of conservative long-term mandate shifts its investments, it is never a casual thing, never. It's not just a news headline that fades away. It's often like a seismic event. It sends ripples through global financial markets. It doesn't just signal broad market trends. It suggests a really profound conviction in an asset class, a calculated strategic move, not just chasing some fad. Other big investors, institutions worldwide, they watch these guys closely because they're seen as a benchmark, a signal of where smart, patient money is going. This is the kind of move that could genuinely influence how other large funds allocate assets for decades, maybe.
Precisely. And let's dive right into the core data. This comes from their Q2 report as unearthed and analyzed by Standard Chartered's Geoffrey Kendrick. The headline number, the increase in Norway's Bitcoin-linked holdings. It's truly astonishing. They boosted their exposure by 83% in one quarter. The second quarter alone. Now, this is nowhere near a marginal adjustment. It's not just a slight rebalancing or, something that happened passively because the market went up. This looks like a very aggressive, deeply deliberate move, especially when you think about the fund's tradition. Stability, diversification, super long-term horizons. That's their usual game. For a fund that usually tweaks its portfolio tiny bits over years, an 83% jump in 3 months, that's a paradigm shift. It really is. And to put some numbers on it, this huge shift, their estimated Bitcoin exposure, we call it BTC equivalent, right?
Yeah.
Meaning the rough amount of Bitcoin their shares in companies like MicroStrategy represent, not direct Bitcoin ownership.
Right. That's key. Indirect exposure.
Exactly. That surged from what was already pretty notable, about 6,200 BTC equivalent at the end of Q1, to an impressive 11,400 BTC equivalent by the end of Q2.
Wow.
Yeah. That's a net increase of 5,200 BTC equivalent in just 3 months. This calculation, it looks at the Bitcoin held by those underlying companies relative to their market cap, gives us a proxy for the fund's indirect conviction. And it's not a trivial amount. We're talking hundreds of millions of dollars worth of additional exposure at current prices, accrued in one quarter, by the world's biggest fund.
That BTC equivalent concept is really important to grasp. So they're not just watching this space, they're actively adapting to it. But what does this kind of bold, proactive step from such a stable government-backed fund really signify? What's it telling us about how digital assets are perceived now, their future? Moving from the fringe maybe towards something more mainstream, accepted in institutional finance?
Well, that's the million-dollar question, isn't it? Or maybe the multi-trillion-dollar question in this case. When Kendrick highlights, and I'm quoting him here, the sheer velocity of this increase, and says it must be a proactive position that carries immense weight. Think about Norway's mandate. Manage the oil wealth for future generations, maintain stability, get long-term sustainable growth. For them to make such a sharp, rapid increase in exposure to something like Bitcoin, which has been historically volatile, it speaks volumes. It implies a really deep internal shift, a better understanding maybe, an acceptance of Bitcoin's evolving role, not just as some speculative thing to trade, but maybe as a legitimate strategic piece in a diversified portfolio. Think about it from their perspective. A sovereign wealth fund's main goal is preserving capital and getting real returns over the long haul.
Yeah.
Bitcoin in that context could be seen as maybe a potential uncorrelated asset, something that offers diversification against traditional stocks and bonds. Especially now, with all the monetary expansion we've seen, potential worries about currency debasement.
Right, the macro environment.
Exactly. It could also be seen as maybe a digital alternative to gold, or even a hedge against certain kinds of inflation that traditional assets might not cover well. So this suggests they're not just observing, they're actively adapting, looking at new risks, new opportunities in a pretty uncertain world. And for you listening, it prompts a fundamental question, doesn't it? If this absolute pillar of global finance is moving this way, carefully calculating this exposure, what does that tell you about where the rest of the financial world might be heading? Maybe even your own investment thinking. It really challenges the old ideas about what's safe and strategic for the long term.
Okay, now this is where the strategy, maybe the innovation too, really comes into focus. It gets really interesting here. You might be wondering, how exactly did Norway's fund pull off this massive 83% jump in Bitcoin-linked holdings without apparently buying actual Bitcoin? Because, let's face it, for a sovereign wealth fund, holding Bitcoin directly, that can be complicated. Legally, regulatorily, operationally. It's just not as simple as you or I opening an account on an exchange. Custody alone is a huge issue for institutions. This is precisely where their sophisticated indirect playbook comes in. They didn't just go onto Coinbase and buy Bitcoin. Nope. Instead, they strategically ramped up their exposure by investing in the shares of publicly traded companies. Companies that themselves hold a ton of Bitcoin on their balance sheets. The main way they did this, MicroStrategy, ticker MSTR. And as a smaller but still notable addition, they also bought shares in a company called Metaplanet. This strategy, it's pretty ingenious, right? It lets them get the benefit of Bitcoin's price moves, its underlying value proposition, essentially getting proxy exposure, while potentially dodging many of the direct operational headaches. Custody risks, tricky compliance stuff that direct crypto holding might involve for a huge entity like them.
Yeah, dodging the direct hurdles.
It's like classic financial engineering, just adapted for a brand new asset class.
And understanding this indirect approach is absolutely crucial here. It shows the sophistication, MicroStrategy, for anyone not following that space closely. They are the dominant player by far. When it comes to public companies holding Bitcoin, they really pioneered this whole strategy. Right now, MicroStrategy holds, get this, 628,946 Bitcoin on its balance sheet.
600,000. Wow.
Yeah. At current prices, that's worth nearly $74 billion. Billion dollars with a B. This basically makes their stock, MSTR, a highly leveraged proxy for Bitcoin itself. When you buy MicroStrategy shares, you are essentially getting significant exposure to how Bitcoin performs. Because the company's value is so tightly, heavily linked to its crypto stash, MSTR shares often act like a levered Bitcoin ETF, moving very sharply with Bitcoin's price. And then you've got Metaplanet. They've emerged a bit more recently as a player here. People often call them Japan's MicroStrategy because they have a similar corporate strategy, stack Bitcoin as a primary treasury asset. Metaplanet is currently the 7th largest corporate holder globally. They've got 18,113 BTC, valued over $2 billion.
Okay, so smaller than MicroStrategy, but still significant.
Definitely. And while it's a smaller piece of Norway's Bitcoin puzzle compared to MSTR, including its signals, maybe a diversified approach. Even within the indirect strategy. The source material of the report notes that around 200 BTC equivalent was specifically added via Metaplanet in Q2. So it was a deliberate, though smaller, allocation to this Japanese proxy too.
So it really is about getting the economic upside without the immediate operational pains. Geoffrey Kendrick's key insight really nails the genius of this, doesn't it? He says it very directly. Norges is using MSTR as a way to gain exposure to the underlying.
Yeah.
That's not just a casual comment. That's like the core of the strategy explained.
Absolutely. That statement is critical because it clarifies the how. It means these huge institutional players, like Norway's fund, can effectively navigate or maybe even bypass the direct crypto holding restrictions, or get around the complex, often still fragmented and evolving regulations that might apply if they held Bitcoin directly on their books. They get the economic upside of Bitcoin without the immediate operational and compliance nightmares. It's a brilliant workaround, really. It offers a path for traditional finance to tap into this new asset class, but within the familiar regulated world of equity markets.
Right, using established rails.
Exactly. It's about fitting this new innovative asset into a familiar, compliant wrapper. If we connect this to the bigger picture, it really highlights that institutional adoption isn't just about direct Bitcoin buys. Not always. It's also about finding these creative routes, using innovative financial tools, corporate structures. This method shows a really sophisticated approach to asset allocation in a market that's still, let's be honest, maturing. It's not about their fund managers setting up crypto wallets. It's about strategic investment in public companies whose core business, or at least a huge chunk of their balance sheet, is tied directly to Bitcoin's fate. This gives them layers of established corporate governance, auditability, regulatory familiarity, things that are absolutely essential for funds of this size and importance.
Absolutely critical.
It gives them a familiar package, public shares wrapped around this novel, maybe still slightly misunderstood asset like Bitcoin.
It probably also offers a layer of maybe abstraction for their stakeholders, for the public. They can say, we hold shares in MicroStrategy rather than we hold Bitcoin. Might be easier to communicate.
That's a very good point. Plausible deniability, perhaps, or just simpler messaging. So for you, listening, this really shows that institutional interest isn't just a yes-no on buying Bitcoin directly. It's also about this creative, indirect financial engineering. Finding ways to get exposure to a rapidly evolving asset class, it shows a pragmatic adaptation. Traditional institutions looking for compliant, structured, auditable ways to join the digital asset party. It also raises interesting questions, about the premium or discount these proxy stocks might trade at compared to the Bitcoin they hold. That's a whole other layer of analysis fund managers will be looking at. This whole strategy is really a testament to the ingenuity that gets applied when massive pools of capital start chasing new high-growth opportunities, but within the existing financial system.
Okay, so this incredible insight into Norway's indirect Bitcoin play and how this huge move even came to light. It points straight to the meticulous work of Standard Chartered's Geoffrey Kendrick. He's the global head of digital assets research there. Standard Chartered, obviously a major international bank, huge presence in global finance. His analysis isn't just, informed guessing. It's grounded in hard data, a rigorous method, and a really deep understanding of how markets work, how institutions behave. His method, especially for tracking these indirect plays, it's pretty rigorous. Needs a bit of detective work, frankly. Kendrick's findings, they mostly come from analyzing these things called 13F filings. They're filed with the U.S. Securities and Exchange Commission, the SEC. For anyone who tracks institutional money, a 13F is basically a quarterly report. Any institutional manager with over $100 million in assets has to file it, disclosing their U.S. equity holders.
Right, the standard filings.
Yeah. Exactly, but it's not just about what's in the filings. It's about piecing together the full picture. Oft is the indirect crypto exposure that these filings only hint at. That means digging deeper into the specific companies held, like MicroStrategy and Metaplanet, and understanding their strategies. It's like finding breadcrumbs of crypto adoption hidden within traditional stock market data. It's not a simple data pull. It's really connecting dots across different financial worlds.
And that meticulous, almost forensic analysis. That's exactly what lets Kendrick make these observations that carry real weight and often turn out to be spot on. He revisited and expanded on his comment about Norway's move, stating, very clearly, the increase in one quarter, 83%, has to be a proactive position. Now, this is not just a casual remark. It's a profound interpretation. It implies this wasn't some accident, not just passive accumulation because MSTR stock price went up or Bitcoin went up. For a fund like Norway's, given its size, its conservative nature, its bureaucracy, an 83% jump in Bitcoin-linked holdings in just 3 months. That strongly suggests a deliberate top-down, highly strategic choice. It means they likely did extensive internal research, got multiple levels of board and committee approvals. It points to a clear, high-level strategic commitment from the very top of the fund.
Not just one manager's idea.
Exactly. This wasn't just some portfolio manager quietly tweaking things. It looks like a fundamental shift in their long-term investment thinking. reflecting a deep conviction in Bitcoin's future role. They actively sought out and executed this increased exposure, which suggests they see Bitcoin not just as a quick trade, but as a legitimate strategic part of their allocation.
Yeah.
That kind of institutional conviction is rare, especially for something like Bitcoin, and it speaks volumes about their long-term view.
So this isn't just a one-off event then. It's part of a bigger trend he's been tracking for a while.
Absolutely. This proactive stance, it isn't the brand new revelation from Kendrick. It's part of a consistent pattern he's been seeing and reporting on. His current report is really a continuation and acceleration of a trend he's been flagging for some time. You can trace it back to his analysis back in May, for instance. He already identified the sovereign and government entities were boosting their indirect Bitcoin exposure back in Q1, mostly through buying MicroStrategy shares, just like Norway did more aggressively in Q2. So Norway's big Q2 surge wasn't totally out of the blue from his perspective. It was an intensification of something already happening. He's been seeing these signals build. And it goes back even further. Kendrick actually made a very specific prediction back in February. He stated quite boldly that more sovereign wealth funds would gain exposure to Bitcoin. Now, seeing Norway, the single largest sovereign wealth fund on the planet, not just getting exposure, but dramatically increasing it, that really shows his pattern of observation and prediction is proving pretty accurate.
He called it.
He basically did. This isn't just a lucky guess. It's a long-term analytical framework that seems to be playing out. He's not just reporting the news, he's anticipating it.
Which raises this huge question, maybe even an existential one for the crypto market. Is Norway just an isolated case, a unique outlier because of, I don't know, their specific circumstances? Or are they, as Kendrick seems to suggest, a bellwether, signaling a much bigger emerging trend among sovereign wealth funds globally? If the largest, arguably most conservative fund is making this kind of proactive, well-thought-out move, how long before others follow? Smaller funds, maybe more agile ones, or other long-term players? Or perhaps they already are, and we just haven't seen the 13 Fs yet. Maybe Kendrick's next analysis will uncover more of these quiet strategic moves.
And this is where it gets really compelling for you, listening. Understanding the analyst's perspective, his careful methods, his track record. It helps put this news in context. Beyond just one headline about Norway, it gives you crucial insight into these powerful systemic forces that are shaping how institutions adopt crypto, how global investment strategies are changing. It shows you these trends aren't just random noise. They're part of a bigger unfolding story that expert observers are piecing together from the data. It means that what might still seem like a niche, volatile asset class to some is increasingly becoming a serious topic of strategic discussion inside the world's most powerful financial institutions. This isn't just a story about Norway, really. It's a story about the changing face of global finance itself.
Okay, so if Norway, the world's biggest sovereign wealth fund, is making this kind of proactive, indirect move into Bitcoin, what is that signal for the wider market? And how is an analyst like Geoffrey Kendrick, whose work brought this whole thing to light, adjusting his future outlook based on these very movements? Let's turn to his latest projections. They're even more bullish now. He's certainly known for being optimistic on crypto. Some might even call his predictions audacious. But what gives you confidence in his method, especially when we see a giant like Norway's fund kind of validating his earlier insights?
Yeah, that's a fair point. Audacious is one word for some of his calls. But what gives them weight, I think, is that they're built on these foundational trends we've just been talking about. The accelerating institutional adoption, Norway being a prime example, the increasing sophistication of how they invest the indirect plays, and just a growing understanding, perhaps, of crypto's role in a diversified portfolio. When we look at Kendrick's specific price targets and market growth forecasts now, yeah, they are remarkably optimistic. They paint a very clear picture of substantial growth across the whole digital asset space. And it seems specifically influenced by what he sees as this relentless march of institutional money coming in. Let's start with Bitcoin. His current forecast, which he recently raised, is an ambitious $135,000 by September 30th.
Wow, that's very near term.
Extremely near term. That's a very aggressive short-term call, suggesting he sees momentum building rapidly right now. Looking a bit further out, he's reiterated his year-end target, $200,000 for Bitcoin.
Still $200K by end of year.
Yep. And his longer-term vision, $500,000 per Bitcoin by 2028. These aren't small bumps. These numbers represent multiple X's from where we are now, fueled, presumably, by continued institutional buying and mainstream adoption hitting that fixed supply. The underlying thinking seems to be, supply is capped, and demand from players like Norway is really just starting.
And his optimism isn't just limited to Bitcoin, is it? He's also updated his view on Ethereum.
Not at all. It's definitely an ecosystem-wide view. He's also significantly raised his projections for Ethereum. He recognizes its key role in DeFi, its growing utility. He now sees Ethereum hitting $7,500 by the end of this year. That's a big jump from his previous forecast, which was $4,000.
Quite a high.
Yeah. And his long-term projection for Ether by 2028 is an astonishing $25,000. That's also a massive leap from his prior target of $7,500. So this suggests he sees real fundamental value drivers and adoption happening beyond just Bitcoin, especially with things like decentralized apps growing, maybe potential for Ethereum ETFs. He clearly envisions a future where Ethereum's utility drives significant value, not just speculation. And it doesn't even stop there. Kendrick's forecasts cover other major altcoins too. It shows a pretty comprehensive bullish view for the whole ecosystem. For BNB, the Binance ecosystem token, he predicts $2,775 by 2028. He sees Avalanche, AVAX, that fast layer 1 chain, climbing to $250 by 2029. And for XRP, the Ripple token, he forecasts a rise to $12.50 by 2028. These specific numbers, they underscore the depth of his analysis. His conviction seems to be that significant price appreciation is still ahead across a range of digital assets, driven by different factors for each project, sure, but all getting a boost from this overall institutional and retail adoption trend.
And beyond the individual coins, he also looked at stablecoins, right? Which are pretty critical infrastructure for the whole crypto economy, like the plumbing almost.
Indeed. His forecast for the total stablecoin market is really telling. He expects it to approach a massive $2 trillion by the end of 2028.
$2 trillion just in stablecoins.
Just in stablecoins. That points to a future where digital currencies aren't just investments, but maybe widely used for transactions, remittances, as the foundation for all sorts of financial applications in the digital world. A growing stablecoin market isn't just about speculation. It signals real utility, real infrastructure being picked out. It's a sign the space is maturing. Now, while we're throwing these big numbers around, it's really crucial to step back and think critically about the nature of these kinds of high-level price predictions. These forecasts, even coming from a respected analyst at a major bank, they are inherently based on a bunch of assumptions.
Right, they're not guarantees.
Not at all. They assume, for example, that institutional adoption keeps accelerating, like we just saw with Norway. They also assume technology keeps improving, blockchains get faster, more scalable, more useful. And critically, they probably rely on getting more regulatory clarity around digital assets globally. That would definitely de-risk the space for even more traditional money to come in. So these are an analyst's forecasts. They provide a specific vision of the future based on his expertise, current trends, the drivers he sees. They offer a potential path, a scenario Kendrick thinks is increasingly likely given the momentum. For you, listening, these aren't just numbers to blindly accept. They represent a comprehensive vision of growth for the whole digital asset world. And it's potentially fueled by exactly the kind of institutional moves and strategic shifts we discussed with Norway's fund. It paints a picture of a market that, according to Kendrick anyway, is still in the relatively early innings of widespread institutional integration and mainstream adoption. It's a bold vision, yeah, but one that seems to be getting validation from the very players he's watching. #outro.
Wow. Okay, that was quite the deep dive. Illuminating, really, into what feels like a pivotal moment in global finance. Let's quickly recap the key takeaways. We started with the sheer significance of Norway's government pension fund, global world's largest sovereign wealth fund, and its recent, pretty aggressive move. We learned they boosted their Bitcoin-linked holdings by that staggering 83% in Q2. But, crucially, they did it indirectly, strategically, mostly through MicroStrategy shares, a bit of Metaplanet, cleverly avoiding the direct ownership headaches, navigating the regulatory stuff. Then we dug into the brilliant analysis by Geoffrey Kendrick at Standard Chartered. His meticulous work with those 13F filings brought this whole powerful trend into the light. His observation that Norway's big increase was a proactive position, meaning deliberate, strategic, top-down commitment that really stood out. Key insight there. And finally, we looked at Kendrick's consistently bullish outlook for the whole crypto market, some really eye-popping price targets for Bitcoin, Ethereum, other alts, plus that huge forecast for stablecoins, all seemingly underpinned by the very institutional adoption we just talked about.
So what does all this actually mean for you, listening in? Well, this deep dive illustrates a critical point, I think. It's undeniable now. Even the most traditional, the largest, the historically most risk-averse financial giants, they're finding sophisticated indirect ways to bring digital assets into their multi-trillion-dollar portfolios. This isn't just about a few crypto funds anymore. This signals a profound maturation of the digital asset space itself. It suggests it's increasingly being seen not just as a speculative gamble, but as a legitimate, maybe even necessary, part of a diversified long-term investment strategy. The relevance to you is pretty clear, I think. It's about understanding this evolving landscape of global finance. It shows how innovation, even using traditional tools like stocks, is fundamentally reshaping investment strategies, challenging the old asset allocation models. This is a powerful story about how the digital asset world is slowly but surely seeping into the very core of the global financial system, moving from the edges towards a more central, even if still indirect, role.
And, before we leave you with our final thought, putting these deep dives together, digging into reports like Kendrick's, it takes a fair bit of effort. So if you've enjoyed this, if you found it valuable, maybe consider subscribing or leaving a comment, engaging with the content.
Yeah, it genuinely helps support the channel,
Yes.
boosts visibility in the algorithms. You know how it works.
And it lets us keep creating this kind of quality crypto content for you. Your engagement really does make a difference for us.
Okay, so let me leave you with a final provocative thought to chew on. If the world's largest sovereign wealth fund, a guardian of national wealth, tasked with secure investments for generations, is not just dipping its toes, but actively finding increasingly sophisticated ways to get exposure to Bitcoin and this whole digital asset space. What does that truly signal about the long-term viability, the mainstream acceptance of these assets across the entire global financial system? And maybe more personally, what does it mean for how you might think about this space going forward? Not just as some niche curiosity, but as a growing, potentially foundational piece of the investment world, influencing everything from national treasuries right down to your own long-term financial planning.
That is a powerful question to ponder, and it really highlights why this space is just so endlessly fascinating right now. Thank you so much for joining us on this deep dive into Norway's strategic Bitcoin play. We really encourage you to continue your own exploration into this ever-evolving, truly groundbreaking world of digital assets. Until next time, keep digging.